Chilly start to the week. Well, in Johannesburg, in any case. And as usual, at the start of the week, we take a look at things business. Courtesy of Capital Legacy, your number one provider of wills and estate administration. And as usual, we're joined by our business journalist, Chris Gibbons. Chris, nice to have you with us once again. I see that Environment Minister Barbara Creecy has sided with her cabinet colleague, Gwede Mantashe, over his commitment to coal-fired power. Is that a surprise?
Good morning, Jeremy. Yeah, we talked about this last week, if you recall, when I suggested that Mantashe, Minister of Minerals and Energy, digging his heels in over coal-fired power. Well, Barbara Creecy, Environment, Forestry and Fisheries, says Mantashe's concerns are valid. Speaking to an online gathering ahead of the COP26 climate meeting in Scotland at the end of this month, Creecy backed Mantashe, saying the planning, timing and pacing of the transition away from coal were important to ensuring an orderly energy transition, particularly given the country's current deficit of electricity supply. Mantashe is warning that if we make the jump away from coal too quickly, the lights will simply go out and we will face economic collapse. It's as simple as that. Quoted by Engineering News, Creecy also defended Eskom's decision to include gas to power in its decarbonisation plans, arguing that gas was an important transition fuel.
Well, let's see if you can get your hands on it, because there's an international shortage of gas, isn't there?
Well, quite right. Part of the global energy squeeze that we're facing at the moment. We'll talk about that in a moment. But the Environment Minister was also quick to point out that while a breakthrough was required at COP26 on the issue of climate finance, the first thing that needed to happen was for developed countries, the rich countries, to honour their commitments of $100 billion per year towards the problem. There's been a lot of talk from the rich world, but very little cash. And Creecy's quite right when she says COP26 would not live up to the expectation of being an ambitious COP, as they're calling it, unless clarity was provided on the actual mobilisation of that $100 billion. In other words, it will be seen as a failure unless the rich world puts its hand in its pocket.
Okay, so the energy squeeze, and here I'm talking about the global energy squeeze, is getting worse.
Jeremy, Brent crude oil nearly $86 a barrel this morning. Natural gas prices near record highs. Britain has started firing up mothballed coal-fired power stations to try and help. And I bet Uncle Gweezy loves that one. And President Macron has reversed course, recommitted France to nuclear power. He says France will spend €1 billion on new nuclear plants by the end of this decade. And come to think of it, Minister Mantashe probably likes the sound of that one as well. Brent crude oil, as I say, up more than 62% year to date. Japan, by the way, also thinking about restarting some 30 nuclear power plants, which were mothballed as well after the Fukushima disaster. And all of this part of the ramping up of the global economy in the wake of the pandemic. Throw into the mix extensive delays at many of the world's major ports, a shortage of truck drivers in the United States and Europe, and you can see why many are forecasting a very chilly Christmas indeed for the Northern Hemisphere.
So how are the markets reacting to all of this?
Surprisingly, Jeremy, they're on the up. Wall Street ended last week with one of its best days in several months, largely as a result of some stellar numbers from the big banks. Goldman Sachs, for example, reporting that it's on track for a record full-year profit, well ahead of forecasts. Similar numbers from JP Morgan Chase, Morgan Stanley, Bank of America and Citigroup. Investors are reading those figures to indicate that the US economy is in very good shape and inflation is less likely to be a problem in the future over there. We thought we had seen something of a correction to the markets, but in New York, the Dow is still up over 15% year to date. The S&P 500, 19%. The Nasdaq up 15.5%. London's FTSE up 12%, and our own JSE sees the all-share up 12.8% year to date. The top 40 up just over 11%.
Is it my imagination, Chris, or is the rand looking a little healthier too?
Jeremy, it depends which way you look at it. Month to date, the rand's up 3.4% or so against the dollar. About the same for the euro, only 1.5% up against sterling. Month to date. Year to date, against the dollar, we're flat. Against the euro, we're up nearly 5.4%. We're also flat against sterling. But you know what? If you're looking for a big gainer, try Bitcoin. The story of the month, and the year has to be Bitcoin, up 42% this month alone, over 84.5% year to date. This morning, just beneath its all-time high, just over $62,000 per coin.
What's driving that latest push?
The market is expecting the launch, probably later on today, in fact, of the first Bitcoin futures exchange in the United States. Bitcoin Futures Exchange Traded Fund, let me get that right, in the US. Key question, will the US Securities and Exchange Commission give its approval? Well, even if it doesn't, the fact that it will allow the ETF to continue trading would be just another stamp of approval from the US financial establishment for Bitcoin. New York Stock Exchange has given its approval to the ETF to trade without SEC approval. Needless to say, the Bitcoin faithful are talking the crypto up and up and up, as they always do.
Yeah. Okay, let's get back to local now. I was away over the last weekend, did a bit of fly fishing, and one of my mates is pretty big in the steel industry, and he was explaining the problems that they're having at the moment with the strike that's on, and that strike continues.
It does, Jeremy, sadly, and it's costing both the industry and the workers. The Steel and Engineering Industry Federation, SEIFSA, reckons about R500 million has been lost already in output. And now this is a sector, don't forget, as I'm sure your mate told you, it's already trying desperately to recover from the pandemic and also the effect of our very weak economy on demand. SEIFSA represents about 18 organizations employing about 170,000 workers. Overall, the strike has about 300,000 people out, downing tools. SEIFSA estimates that upwards of R100 million has been lost in wages. That's where the workers are being squeezed. It's also very clear that jobs are being lost and more will go the longer the strike continues. The main union involved, NUMSA, very militant, very hardline, as we know. They're saying that the latest offer from the employers would only benefit the lowest paid workers. They want 8% across the board. The employers have put a 3-year deal on the table with increases effectively just above CPI, but NUMSA has flatly rejected that.
Chris, I see that MTN and Vodacom have joined Telkom in suing ICASA over its bid to take back the emergency spectrum. What's going on here?
That, Jeremy, is a very fair question. On the surface, it's about a decision by ICASA to take back that temporary spectrum issued to the big cell phone companies at the start of the pandemic. Spectrum was freed up to deal with the vast numbers of people suddenly having to work from home, finding themselves reliant on their cell phones for internet access. Now ICASA wants the spectrum back, saying it was never meant to be a permanent allocation. First Telkom, now Vodacom, and now MTN have filed papers in the Pretoria High Court to prevent this from happening. They say the move would disrupt the provision of services and harm consumers. ICASA says that to leave it out there would distort the market and prejudice companies that did not apply for it back in early 2020. However, and here's the rub, in my opinion, all of this is part of the much bigger fight that's been going on over the auction of spectrum and the clash between ICASA, the cell phone companies, some of the big broadcasters like ETV, and what is now the Ministry of Communications and Digital Technologies. All to do with the migration of TV from analog to digital, the manufacture of set-top boxes, and who gets the spoils from that little goldmine. It's been dragging on, as you're aware, for years and years. Everyone involved hates everyone else. No one trusts anybody. Both ICASA and the various government departments involved have shown themselves to be spectacularly incompetent, and everyone involved reaches for their lawyers at the earliest opportunity. Despite repeated promises to get all this sorted out, President Ramaphosa even has failed to make any headway.
Okay, lastly, Chris, as you predicted, the short-term insurers have made a move on the claims against losses as a result of business closures.
Yes, as you say, we touched on this one last week. If you recall, just to recap, Santam, the country's biggest short-term insurer, lost in the Supreme Court of Appeal against two small Cape Town businesses, hospitality businesses. The company argued it did not have to pay business interruption claims because it wasn't the disease that caused the lockdown, caused the business interruption, but rather the government's decision to impose a lockdown. The court told Santam politely to get knotted and pay up. We suggested that this would provoke a reaction from the insurers, famous, of course, for their multiplicity of reasons for not paying on claims. Well, according to KPMG, quoted by Fin24, that's exactly what happened. Insurers and reinsurers are simply refusing to insure against disasters like pandemics. KPMG says this could create a gap in the market that would damage the economy. We might need something like SASRIA to help cover that gap. SASRIA, of course, the special state-owned vehicle set up to cover riots and that sort of thing. What sticks in the throat, at least in mine, is that the COVID pandemic hit life insurers obviously very hard. They've lost about 2.6 billion rand so far. But the short-term players, with two exceptions, still grew their net profit or recorded the same levels of profit as 2019. In fairness, the two exceptions, Old Mutual Insure is one, Santam is the other, but still, it's not as though they have been brought to their knees by any of this. And Santam is among several that have already amended their policies to exclude pandemics. Jeremy, you remember that old slogan one of the insurance companies used? We don't hassle, we pay. Yeah, right.
Chris, we'll leave it there. Thank you very much for joining us once again. Chris Givens, our business journalist here on Mansfield Today with the latest in business, brought to you by Capital Legacy, your #1 provider of wills and estate administration. Tomorrow, we'll be joined by Advocate Lance Brogden. We'll catch you then. Have a good day for the rest of this Monday. Cheery bye.